Hello friends, in the series on the income tax cases today, we will discuss the case of SAWAILAL BHATTI versus income tax officer. This case has been reported in 104 ITR Tribunal at page number 92. The matter has been decided by Mumbai ITAT G bench and the date of the judgment is 31st March 2023. The logic of discussing this case is that whether penalty under section 271 subsection 1 clause C for the concealment of income can be imposed on the assessee where the addition of the income has been made to the income of the assessee on the basis of some percentage. Like in this case, there was allegation on the assessee that the assessee has booked bogus purchases. This information was received from the sale tax department by the income tax department, and on the basis of that information the assessing officer made addition of 12.5% to the income of the assessee for the bogus purchases. In this case there were three assessment years: assessment year 9-10, assessment year 10-11 and assessment year 11-12. When the addition of 12.5% of the bogus purchases was done to the income of the assessee challenged this assessment order before the CIT appeal, and CIT appeal as it is copy pasted the order of the assessment done by the assessing officer and upheld the addition. When this matter came before the ITAT reduced the addition of estimation basis of 12.5% to 5%. As soon as the order was done by the ITAT, the learned assessing officer confirmed the penalty order up to the 5% addition confirmed by the ITAT, meaning thereby that the assessing officer confirmed the penalty up to a level of 5% of addition on the basis of bogus purchases. When this penalty orders were confirmed by the learned assessing officer, the assessee went to the CIT appeal for these penalty orders, and the CIT appeal also upheld the order of the assessing officer that this penalty up to the 5% of the bogus purchases is correct. When this matter came before the ITAT said that when some additions have been made on account of bogus purchases on the basis of some percentage, like in this case 12.5%, and which has been reduced by the higher appellate authorities, like in this case by the ITAT, from 12.5% to 5%, then whether in these cases it can be said that the assessee has concealed his income. So the ITAT gave a very categorical answer in this case, that in this case it cannot be said that the assessee has concealed his particulars of income so that his tax liability is reduced. Friends, as all we know that there is a very clear mandate of law that whenever the additions are made on the basis of some estimation or some percentage basis, then the penalty in those cases is deleted by the higher appellate authorities. So, but there was a gap in this regard, that whether this rule will be applicable in all those cases where the additions have been made for the bogus purchases. So from this decisions it can be now concluded, or a law has been laid down by the Mumbai ITAT so that it can be used in another ITAT also or in another states also, that whenever the additions are made for the bogus purchases on the basis of some percentage basis, and that percentage is upheld or that percentage is reduced by the higher appellate authorities like CIT appeal or ITAT, then in those cases the penalty for concealment of income under section 271 subsection 1 clause C should not be levied. Friends, this case is very important because nowadays a lot of additions are being made for the bogus purchases. At the end of this video, once again I am repeating the name of the case. The name of the case is SAWAILAL BHATTI versus income tax officer, and this case has been reported in 104 ITR Tribunal at page number 92. The matter has been decided by Mumbai ITAT G bench and the date of the judgment is 31st March 2023. Thank you, friends.